Hello, you're watching Channel 127 with me, Nurata Ramin, your host for this program, Capital Talk. And today with me, we have our very special guest, Mr. Martin Wong, and he's the editor of TradersTruthReview.com. And he is an expert in what? Okay, let the master actually introduce himself. Hello, Mr. Martin.
Thank you for inviting me over.
All right, so maybe you can actually introduce yourself to our viewers on the Capital TV.
Yes. Hi, my name is Martin. I'm the editor of TradersTruthReview.com. This is an educational website that we provide a platform to actually enhance and pretty much, teach people about the opportunities that is available in the stock market. At the same time, knowing that the risk is involved and how one should protect oneself if should there be a market collapse, and how in any market collapse there's always opportunity.
Right, nice. And to actually prove it, Mr. Martin also has written quite a number of best-selling books.
Thank you.
We have a Dividend, Don't Lie in my hand here. Dividends Don't Lie. This is the look of the book. Quite interesting. SuperCharge, Your Investing Approach for Big Profits. Okay, this is the one. All right, and we also have Becoming Rich Fast, How You Can Invest Like the Very Rich, and co-authored with Bill Werman. Yeah, if I pronounce it right, Werman. In Master the Markets Trading Manual, How Did You Become a Master in Investments and Trading is actually Mr. Wong. And after writing all this, before writing all these books, yeah.
So before I was writing all these books, I used to come from an engineering background. And it's always been a passion, in the investment side of it. And
right.
I still remember when I was, before I took my tertiary education, my dad said that do something that you will get you employed. And that's how I started in the engineering and electrical with Monash universities. However, my passion
That's
always...
tough. That was tough.
Yeah, it is. So, but over the years, I found out my passion is actually in the stock market, in the area of investing and trading. So as such that what used to be my passion or as a hobby now becomes part of my career. So that's how I started this website. And I have worked in the industry before, also as an ex-fund manager and also as a stockbroker. So that's how my journey has become.
Right. How do you change your interest in education or maybe expertise, at that time, from engineering, electrical engineering to making money? Is it because maybe you started selling something that time?
No, not really. I think the whole point is to pursue an interest, and to continue to improve yourself. Keep asking, are you satisfied of what you have? Is there something more you can have? So all this pursuit over the years has led me to buying a lot of books. When it comes to investing, to write these 2 books in here, I have read close to about 300 to 400 investment books and trading to really know the subject. And someone did tell me, if you spend hard enough learning and training within a period, let's say maybe 3 years, you can be an expert. And it's quite true. But also at the same time, I took courses and meeting the right people. That's a saying too. If the student is ready, the master will appear. And that's apparently happened to me.
Well said. Okay, you even have a popular chart of the week here, Mr. Martin, and submit a chart for analysis which has received rave reviews. So how did you come about this chart? Did you have a formula to determine the results, or you have contacts that provide you?
What happens is, this is an idea came from my counterpart in US, the TradeGuider.com, which also
you have massive contacts.
Yes, in US, that's our partner in US and also in UK. As a matter of fact, just yesterday we were having a talk and we did talk about this TV show. So a lot of the ideas did borrowed also from my mentor, Tom Williams, which I do talk about in my 2 books. So part of it is also educating the public, right? Because remember, my services, I'm not a licensed advisor, so I can only offer education to teach the people how to be educated themselves.
And consultancy.
Yes, and that's right. So what they do is that in order to have some sort of feedback, like they do in Facebook, I said, no, if you have a stock, you want me to take a look at it, I'm happy to tell you. But again, this is again from an educational standpoint. I will tell you where are particularly opportunities and areas you should look at, and whether you want to continue holding it or not. At the same time, we'll tell you whether the fundamentals of the company is good or bad.
Okay, looking at your networking and your large numbers of fans or followers, I mean, to your website, I can see your visitors are really, I mean, high in numbers. So have you ever been wrong, actually, in your analysis?
Yes, actually, it's in this area you can never get it right. I mean, you come to think of it, the market is uncertain. At one time, I got a phone call from one of my subscribers. He called me up. He said, Martin, you did a lot of posting in there. Did you ever get it wrong? I said, yes, I do get it wrong. So I told him, how much or how many chances, I mean, what is the probability? He said that I'm wrong 10% of the time.
Right.
So I'm saying, are you saying that I'm right 90% of the time? Now, look at that. To me, that's unrealistic. If you can be right 6 out of 4 times or even 5 out of 10 times, that's already good enough. Now, the key thing is when you are right, you write your profit. When you are wrong, you get out.
Right.
That's the key thing to it.
So there's no solution to actually cover whatever prediction which is wrong, or you just like go on with better.
Now the thing with when you can be wrong, you look at it in terms of what has happened.
Yeah.
If you buy a wrong company, what you do? I mean, you can't go in a shareholders meeting or AGM and blame the shareholder.
Right.
If you're not happy, just sell your stocks and move on. At the end of the day, we are all humans, and humans make mistakes. But the question is, what do you do with the mistakes, and how you move on is more important. And make sure that mistake that you made won't kill you or put a big dent on your portfolio.
All right. Okay. So that's what we want to hear, actually. Okay, Mr. Martin, let's go back to basics. Yeah, for some of our budding investors.
Yes.
What is the difference between a bad market timer versus depositor? It is impossible to time the market perfectly, but like what you said just now also. But what if you perfectly mistime the market?
Now, there is no such thing as a bad market timer or depositor. I think at the end of the day, each of these person has to follow a recipe. Now, if you want to make a good cake, what do you have to follow?
Of course, how much flour you need to use is very specific. How do you actually stir it?
Precisely, there is a recipe to both approach, whether you're a depositor or whether you're a market timer.
Right.
Now, to get it perfectly, time or get a perfect stock, in my opinion, it's very, very difficult. Right? The reason
Is
why
it because it's rigid?
No, it's not rigid. The market is always very flexible, and think of it: is the stock market certain? It's not. It's uncertain.
Yep.
So we have to have uncertainty also forecast or put into our system or recipe. So as I said before, when you're wrong, you get out. But when you're right, you continue to write your profit. So on the point about perfect timing, there's no such thing as a perfect timing. There is timing. As a matter of fact, timing is very important to the market. Now, there's many studies that's done. You can do seasonal timing or you can do year-end timing. As I tell people, if you are so worried about the stock market, the best time to invest is always at the end of the year, because there's always a Christmas rally and then you have the Chinese New Year rally. So only stay in rally invested at that time. However, during the year, there is also opportunities in terms of so-called dividend payout, because in my book, Dividend, there is, when companies perform, when they do well, like a lot of companies did, they give high dividends, they good special dividend payout. So a lot of our focus has been the high dividend yield stocks. Even if you were to trade it or invest it, stays to those quality companies, and you do well.
Right. Okay. And then maybe last question for this episode, yeah. Is cash really a king, Mr. Martin?
Well, to me, it's cash, holding too much cash is really a concern in here. Now, you think of it, what does cash bring you? If you put it under your pillow, it's going to be the same at the end of the year. You have to put it into work, and that's what we call productivity. Now, if you put it on a fixed deposit on a cash account, how much are you getting? Less than 3.5%. And how much are you have to pay for inflation? Now, inflation, the official figures are probably less than 3.5. But think of it, how much are you paying your nasi lemak that you have now compared to you have next year? So if you have it in cash, whether in fixed deposit or not, the goal of the investment right, is to beat inflation. That's very important because inflation will erode the buying power of your cash. So that is why keeping cash, to me, it's very, very dangerous. No, despite all the volatility in the market, the key thing in here is to put that cash into good, solid, high quality dividend yield companies. That's a key thing. And my book in here, Dividend.my, will give you some idea in how to do it. As a matter of fact, we published this book in year 2010. Many of our buyers of those books are retiree, and they wrote to me and they have benefited a lot from those lists of shares that we talk about.
Right. Okay. That's great. All right. Okay. To talk about how Mr. Martin would actually describe the perfect timing, or when is the perfect timing for investing. We'll see you in our next episode. And I'm Nurata Ramin with Mr. Martin Wong.
Thank you.
This is Capital Talk.